Welcome to this episode number 89 of your next trade, called today NVDA Addiction Rehab. So last weekend we flagged just before the sell-off on Monday the DeepSeek rise, which is another way of saying that in artificial intelligence there will be competition. So it's pretty funny to see many traders, many investors saying, oh, that's very surprising. We're going to have good AI coming from different countries than the US. And this is what China has been building as well for the last few years. And that explained the sell-off that we had on Monday. Don't get me wrong, that was a very quick sell-off. That was a V-shaped recovery sell-off. But what I'm interested in, what was the trade, where traders made money. And here we look at this chart, which we have two implied volatility over a month. So the white one is the NVDA for the 1 month implied vol. And in orange, this is the S&P 500 1 month implied volatility. And what we have here is this big divergence. And this is what we call a dispersion trade, where traders will be long a single name implied volatility and short the S&P 500 implied volatility. So what happened on Monday? As AI with DeepSeek was under threat, we had many names, tech names, artificial intelligence, NVIDIA down 20%, where there was a big sell-off. And by definition, implied volatility went through the roof. And in the meantime, if you look at the implied volatility 1 month of the S&P through the lenses of the VIX, it went from roughly 16% to 21-22%. So a bit, but not that much. So huge dispersion trade. That was a big winner on Monday. That was the biggest trade and the biggest winner since 2020. So let's look now about the year-to-date asset performances, looking at how the different assets have been doing, starting with stocks. As we can see, S&P is up 2.7%, outperforming the Nasdaq because tech has been a bit struggling with DeepSeek and some other stories. What is interesting is to see that Europe is really strong, 8% for the Stocks 50. DAX is almost up 10% on the year. Why? Because you saw some flows coming from the US, out of the US into other assets. So a bit of a rebalancing after extremely strong performance of the US market, which is making new highs in terms of the weightings for the MSCI world. So in terms of FX, we are kind of flattish for the dollar now after a strong start. And over the last couple of weeks, most currencies have been catching up against the US dollar. Finally, in terms of commodities, if you look at WTI, up 6%, and copper as well, up 6%. So what about the week-to-date asset performance? This is the interesting one. 1% down for the S&P, 1.6%. We were down 3 to 4% on Monday. Still, Europe doing okay overall, an okay picture for the stocks. In the meantime, you see the dollar a bit stronger. So overall, this week we saw some volatility. What I'm interested is the year-to-date industry performance. If you look at the S&P that is here, you see there are many winners, many sectors, industries outperforming the S&P 500. Why? Because the big ones, the big weightings, technology, semiconductors have been underperforming the overall market. So when this weighting of 30-40% is a bit below in terms of performance that the S&P, due to this dispersion as well and those ETFs, you have a rebalancing towards the other sectors and industries. So what we saw is the defensive. We saw some names like Nike and others, consumer staples doing very well for the week-to-date industry performance. So gold miners, social media. Obviously, this is Facebook, Meta helping a lot. Other end of the spectrum, 7% down for the semiconductor. NVIDIA is a big reason to that due to DeepSeek. So what about the sector performance? As we see here, healthcare doing pretty well. Consumer staples, guess what? This is the defensive. So defensive have been doing pretty well. Against that, you get technology again underperforming the overall market for an S&P that is down 1%. So what about the rates now? For China, it was close, so because we got the Chinese New Year, but around 1.6%, way below the other 10 years. US 10 years in the US is now at 4.5% after making highs around 4.7, 4.8. So now we are waiting for the next news from the Trump administration and its ability to reduce the deficit going forward. Fed funds rate, if you look at what are the expectations going forward, we are still expecting roughly 2 times 25 bips, so roughly 50 bips, 0.5%, 0.4%, if I'm correct, 0.43% for 2025. Now, but the VIX, so VIX is at 16%. As we said, we went to 22% something on Monday on the DeepSeek sell-off. But more or less what we see is still volatility pretty compressed, both on the index level and for most of the names. So if you take aside artificial intelligence technology, I agree it's still making 35-40% of the index. You have seen otherwise pretty compressed implied volatility. So let's jump into the technical analysis, as always starting with the S&P. So the trend is still the same. I think for me the picture is still the same, where we are struggling into the 61.20. I'm still short put spread. This is March, which is 5% below out of the money. I think it's offering very good risk reward. We are talking 9-1. But I think what is interesting is the market, is not making real new highs. As we're gonna see, the earnings season is okay, but not that great. If you look at the Nasdaq, the picture is the same. We are still on this trend, this uptrend, but for the time being, we are not making new highs, trading sideways. I'm interested, obviously, into gold. So gold making new highs. Why? The reason is pretty obvious. When you are struggling to have some good hedges, when your bonds are not working as usual, when your volatility is compressed because of many products, what you do is you're going to be buying more gold than usual. So we are making new highs. This is still in the trend that we started in January. So this is your short-term trend. But as you can see, the long-term trend is pretty obvious. We are making new highs after new highs. If you look now at the S&P equal weight versus the S&P 500, so that's a way to mute a bit the performance of the tech and so on. We can see we made some bounce from the lows. So far, there's not a good and strong trajectory. Going forward, I'm interested into the names that are coming with their earnings for this week. Here, I'm looking at Amazon. Very strong move since 160. If you remember or not, Bezos was the CEO, was seller at 200 since he finished selling at the end of 2024 a significant size, not for him, but in terms of billions. We are talking the stock up roughly 20%. So we're going to have these earnings this week, and this is why now I want to jump into what happened for the week. So let's start with the V-shaped recovery. So that is Monday from Tuesday. That is the literal dispersion trade, and then the volatility getting smashed. And as well, as I said, a lot of rotation from going out of semiconductors technology into some other names, some sectors. So what we saw is actually names that were pretty boring over the last few months and just underperforming the market. That did very well over this week. So what you do is you allocate, you take out some of your exposure on one space and allocate to some other space. Having said that, if you look at the inflows of ETFs in semiconductors, they were very strong, especially for the NVDA name. So what happens is, for the time being, retail is still buying the lows or any dips in NVIDIA. So that could be interesting going forward. If we start here, we need to finish here. So far for the week, we had a bit of less Trump noise, but what happened, as always, wait until the end of the session. And what happened on Friday in the last hour, the White House confirmed that and they will apply tariffs on Mexico, China, and Canada. So Canada and Mexico, we are talking 25%, China 10%. So that explains partly the bit of a sell-off. It's not a big sell-off. We are talking 1%, something a bit more into the last hour. But as well, you can think that there is a bit of rebalancing due to the end of the month. So we had earnings, and here I'm interested into understanding, what the market is telling us and what is the reality. So we've seen some crazy moves for Tesla, for example, which came with so-so numbers, but as always, Elon Musk managed to pump up the stock by saying robotaxi is coming. We had as well Apple saying, our numbers have been pretty dull over the last couple of years, but in 2025, we're going to see some growth coming back. But actually, if you look at the price action of Apple on Friday, we came down a bit from the open to the close. So we opened, I think, at 248 or 249, and we finished at 236. So open up 4%, finished down 1% on the day, roughly. So to me, there is a strong divergence between, what I see in terms of numbers and what has been the price action. So let's look more in details about this earnings season, starting here. As you can see in blue, this is the bit for the earnings, and this is something that is nicely summarized by FactSet. So 77% of companies of the S&P have reported actual EPS above estimates, 5% above estimate, which is below. So if you think about this line here, this is below this what we had 2 or 3 quarters ago. Having said that, the actual growth for this quarter is pretty strong. We are talking 13% plus. So strong quarter, but that was expected. And the beats, both in terms of sales and EPS, are good but below average. And I have to say that for many companies that I've been following, the numbers to me are just okay, but we cannot, I think, going much higher based on earnings. So what about the catalyst going forward? So that was last week, sorry. So going for this week, we're going to have macro, we're going to have the ISM manufacturing, ISM services, and the NFPs. Okay, so that gives you, as always, at the start of the month, some busy macro. We're going to have earnings, so tons of earnings. We get names like Palantir, we get Google on Tuesday, we get Amazon later on the week. I think it's on Thursday. So many names and many earnings coming for this week. And as always, after the FOMC meeting, what we have is some Fed members talking about what will be the Fed policy going forward. As well, on Monday morning when we arrive, we should have the Chinese manufacturing PMI. So overall, a lot of macro, a lot of earnings, and as well, we should expect more and more noise coming from, not noise, but news coming from Trump. So that was the case on Friday, just before the close. Now I think the next tariffs will be for Europe. He's starting to talk about tariffs for Europe, and that's something that we should be expecting. So the weekly straddle, I didn't put it here, but it's plus minus 1.6% for the week. So a bit higher than last week, but not a very high number. Let's look at the seasonality, and here this chart is from Goldman Sachs from end of January to mid-February. Is the market normally on average is going higher by roughly 1%. But what is interesting is, as you can see, it's after the expiry, the option expiry on February, that it starts to be a bit more difficult for the overall market. So far what we had is the flows going in, going from mid-February. This is more difficult for the overall market. So here you do have those earnings. As you can see, many names, as I said, Palantir, PayPal, AMD, Google, and Amazon, which are the big ones. So that would be for your earnings season. That would be for your catalyst for this week. So finally, what we are starting from today is we are going to go into a paywall for the Discord community. So unless you have been subscribing to, you are actually currently subscribing to the 4x4 video series, or you are currently doing the mentoring program, if you want to have access to more than 20 channels that we have been building for the last few years, we need now to subscribe and pay $74.99 a month. Why? Because we're going to be putting more and more content. We had a new mentor, Etienne, that joined us a month ago, who's going to be doing, like me, some mentoring. So if you are interested in mentoring, send me an email. If you are interested in accessing the Discord community or the 4x4 video series, you can send me an email and I will reply to you. So this is it for me for this week. Have a good trading week. Bye-bye.